The financial landscape is shifting. Bitcoin's recent plunge, a potential bear trap, and Solana's surprising gain reveal volatile market changes. Meanwhile, alarming housing market signals and China's economic struggles point to possible global turbulence. Hear what leading experts predict for your investments in this eye-opening episode. Subscribe now to stay ahead. Today on Financial Analysis in Review, we will summarize the following videos. From Game of Trades, we have Bitcoin just broke down, our July 2024 Bitcoin forecast. From Figuring Out Money, we have Housing Market is waving the red flags again. From Eurodollar University, we have China's Treasury market just hit a record low. In this insightful episode on the Game of Trades YouTube channel, our focus is on Bitcoin and its recent price movements. We'll dissect whether the recent shifts signal a potential decline. With us today, we have an expert analyst from the Game of Trades team who has a wealth of experience in market analysis and trading strategies. The central thesis of this video revolves around recent bearish trends in Bitcoin's price behavior, juxtaposed against the broader market trends indicated by the S&P 500. The analyst proposes that Bitcoin may be signaling a more significant downturn, especially considering Bitcoin's failure to break above key resistance levels and the divergence from the S&P 500's performance. The discussion includes recent trading decisions and the importance of risk management in navigating these uncertain waters. Here are the key points discussed by expert analyst from the Game of Trades team. Bitcoin price movements. Bitcoin experienced two consecutive 20% corrections since March 2023, a significant shift from its previous uptrend. During May 2023, Bitcoin had a favorable setup with all key moving averages pointing upwards and was right above a crucial support level. Market divergence and trading decisions. Bitcoin diverged from the S&P 500's trend, failing to sustain its move above resistance. The analysts closed half of their Bitcoin position for a 10% profit before further declines hit their stop loss, resulting in a complete position close at the initial entry level. Potential bear trap or false breakdown. The current scenario may be a bear trap. Bitcoin has previously caught up with the S&P 500 after such divergences, as seen in January 2023 and 2024. Large Bitcoin holders have been selling recently, contrary to their buying behavior at the end of 2022. Active crypto trades and risk management. The team currently has an active trade in Solana, which has shown a 10% gain since testing key trendline support. The importance of risk management is emphasized. Only initiate trades with favorable risk-reward, book profits timely, and cut losses early. Expert analyst from the Game of Trades team made the following predictions. Bitcoin testing price channel bottom. The possibility of Bitcoin testing the bottom of its current price channel before potentially recovering to align with the S&P 500 is discussed. This scenario is suggested as a potential bear trap where Bitcoin might initially see further downside before a recovery. Solana's potential upside. If Solana continues to follow its historical price action from 2021, it could reach as high as $560. This prediction is based on the technical setup and historical patterns observed in Solana's price behavior. The overall thesis underscores the need for caution and robust risk management strategies in the volatile crypto market. The Game of Trades team stresses the importance of strategic entry and exit points, highlighting their disciplined approach to booking profits and cutting losses. Viewers are encouraged to stay informed and adapt to market conditions, ensuring careful consideration of potential risks and rewards in their trades. Welcome back, everyone, to another insightful episode of Figuring Out Money. Today, we have the pleasure of featuring Michael Silva, an expert in technical and intermarket analysis. We're diving deep into a topic that should be on everyone's radar, the housing market and its alarming red flags. The core thesis of today's episode revolves around the critical shifts in the correlation between the housing market and the S&P 500. Michael Silva contends that the recent data shows a concerning dip into negative territory, which could signal upcoming volatility in the broader market. He supports his thesis with historical patterns and recent housing data, emphasizing that understanding these dynamics is essential for anyone invested in the market. Here are the key points discussed by Michael Silva. Recent housing data. Recent housing data indicates a slowdown in the economy, with residential construction hitting a 4-year low. High interest rates are keeping potential buyers on the sidelines. Robert Dietz, chief economist at the National Association of Home Builders, noted challenges in both single-family and multifamily markets, the latter hitting lows not seen since 2013. S&P 500 and housing market correlation. The S&P 500 and the housing market are currently exhibiting a negative correlation, a departure from their usual positive relationship. Historical data since 2005 shows that similar negative correlations often precede market volatility. Historical analysis. In 2005, the housing market peaked before the financial crisis, and by 2007, the market was already showing signs of stress. Similar patterns were observed in 2011 and during the 2018 Christmas Eve massacre. In 2022, the housing market indicated potential volatility, which eventually materialized. Michael Silva made the following predictions. Potential market volatility. With the current deep negative correlation, Silva suggests we could see significant market volatility similar to past patterns. He does not definitively predict a repeat of 2008, but warns that the signs are concerning and merit attention. Odds of market pullback. Silva points out critical levels to watch in the S&P 500, particularly the gamma flip level at 5460. A break below this level could lead to increased volatility and potentially sizable market corrections. Michael Silva concludes by emphasizing the importance of paying close attention to the negative correlation between the housing market and the S&P 500. He advises viewers to proceed with caution and to keep an eye on key levels, as a break below the gamma flip line could herald a period of increased market volatility. In this recent Eurodollar University video, the host delves into the startling developments in China's Treasury market, highlighting how the 10-year government bond rate has just hit a record low. This episode seeks to unpack what this means for both China and the global economy. The core thesis of this video is that China's recent economic indicators are signaling a severe downturn, with record low government bond rates exemplifying the growing distrust in China's ability to incite economic recovery. Despite numerous stimulus efforts by Chinese authorities, real estate and broader economic sectors are being met with increasing skepticism both domestically and internationally. The host elaborates on these concerns, presenting a detailed analysis of market signals and the inefficacy of China's economic responses thus far. Here are the key points discussed by the host, whose deep expertise in economic trends and market analysis anchors the insightful discussion. China's 10-year bond rates. The rate hit a record low, signaling accelerating downside and lack of confidence in recovery. This drop follows the release of unexpectedly weak economic data, commodity prices, and market reactions. Key commodity prices, including steel and copper, have reversed their gains, reflecting lack of confidence in China's rescue plans. Stock prices in Shanghai and Hong Kong have dropped significantly since China's historic real estate rescue announcement. Chinese central bank's actions. The People's Bank of China, PBOC, plans to sell Chinese government bonds to try to halt the decline in bond rates. Unlike Western central banks, the PBOC lacks a substantial inventory of bonds, highlighting the challenge of their strategy. Economic data and market signals. Manufacturing and services PMI data indicate significant weakness in China's economy. Despite weak internal economic signals, Western economists show misguided optimism based on potential external demand from the US and Europe. The host, whose deep expertise in economic trends and market analysis anchors the insightful discussion, made the following predictions. Continued economic weakness. The host predicts China's economic struggles will persist as internal and external demand remain weak. This continued downturn could lead to globally synchronized economic weakness. Ineffective central bank measures. Efforts by the PBOC to boost confidence by selling bonds may fail, leading to further economic instability. The video concludes with a stark reminder that China's economic issues are symptomatic of broader global economic vulnerabilities. The host urges a critical view on overly optimistic projections from Western economists, stressing that the global economy is interlinked and downturns in major economies like China have far-reaching implications. The host calls for viewers to stay informed and skeptical of superficial economic optimism, especially in such turbulent times. The experts in these discussions highlighted multiple critical financial concerns and opportunities. In the Bitcoin segment, the Game of Trades analyst emphasized the importance of cautious trading strategies, highlighting Bitcoin's potential bear trap and Solana's promising upside. In contrast, Michael Silva discussed the disturbing red flags in the housing market, suggesting a possible rise in market volatility if trends mirror past crises. At the same time, the Eurodollar University host underscored the significant economic challenges in China, predicting persistent struggles and ineffective central bank measures. Common ground among the experts includes a shared concern for upcoming market volatility and the necessity for strategic risk management. However, while the Bitcoin and Solana prospects offered potential rewards, the housing and Chinese economic indicators painted a more alarming picture. Stay informed, proceed with caution, and keep monitoring these developing stories. Thanks for watching Financial Analysis in Review for July 2nd, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.